We are seeing a huge increase in real-world tokenized assets being added to many blockchains, with a lot of people saying that this will be the future for and will revolutionize all assets, and particularly those in the financial services sector. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. Just a reminder that nothing contained here is financial advice, and let's jump straight in and take a look at this tokenization of assets and what this really means. Tokenization is the process of creating a digital representation through tokens of a real thing. And by thing, we mean asset. So what happens generally speaking is that digital tokens will be created on a blockchain, and these will represent digital or physical assets. So financial assets, fungible or non-fungible assets, tangible or intangible assets like intellectual property, identity and your data, or things like art, concert tickets, real estate or property. So essentially any type of asset. And the most common examples of tokenization that we're probably aware of are cryptocurrencies, stablecoins, NFTs, and even the dreaded CBDCs. With cryptocurrencies obviously being digital assets, but any assets can be tokenized, because the tokenization of assets has been around for a long time, even if we look more recently at cryptocurrencies. One example being PAXG by Paxos, which has been around since about 2019, which is a digital token backed by physical gold. Tokenization just hasn't taken off in any huge way through real-world assets, but in this video we'll see some examples where perhaps it is starting to. And the real-world asset cryptocurrency project with the largest market cap at the time of recording this video is Ondo, with a market cap of over $1 billion, which increased by 4 or 5x since January 2024 alone, and which offers several products, including the world's first example of tokenized US Treasuries, Flux Finance, and is working with BlackRock's tokenized fund called BUIDL. As you can see here, having moved $95 million worth of its OUSG, which is its US Treasury-backed token, to BUIDL. And then we have Pendle, which has shot up a lot recently by about 5x since January 2024, which doesn't make it into the top 100 cryptocurrencies by market cap at the time of recording this video, but has a market cap of about $630 million. And this is just to show you two RWA, or real world asset, cryptocurrencies. But let's take a look at what tokenization of a real world asset would mean through the example of real estate or property. So let's say you owned a house that was worth $500,000. You could then tokenize this asset into, let's say, 5,000 tokens that are stored on a distributed ledger or blockchain. Based on the valuation of $500,000, each token would therefore be worth $100. So if someone buys a token, they would own 0.02% of that property. Remember, the transaction would be through a smart contract, so would be immutable and would be stored on a blockchain, which is transparent, and which we'll take another look at a bit later. So why would this be used? Well, if I needed a loan and didn't want to or couldn't sell the house or remortgage it, for example, then tokenization would be an option. So I could tokenize a portion of the property to raise capital, which makes it more of a liquid asset, which again we'll look at a bit later. And if you were someone who couldn't afford to buy property yourself but still wanted to invest in the real estate market, then this would open up that opportunity for you. So using the example above, if I bought 50 tokens out of the 5,000 available, let's say, for the $500,000 house, that would cost me $5,000 and I would own 1% of that property. If in the future that property doubled in value to $1 million, let's say, I would still own 1% of the property, so would have doubled my investment to $10,000. And what are the advantages of tokenization of assets? Because I've already touched on a few already. Well, firstly, cryptocurrencies, blockchains, and distributed ledger technology can revolutionize how assets are represented. And many believe that the tokenization of assets will transform the structure of financial services, with most assets being tokenized and operating on blockchains in the future, including the CEO of BlackRock, Larry Fink, as you can see here, who is also positive about ETFs and Ethereum, and Benjamin Dean, the Director of Digital Assets at WisdomTree, the ETF provider and asset manager, who argues that blockchains and tokenization should be seen as a wider part of financial innovation rather than just part of crypto, with the focus being on the price of individual cryptocurrencies. The tokenization of assets would lead to faster transaction settlements also, because smart contracts and blockchains can operate 24/7 no matter where you are, which is obviously not the case with the existing financial system we have. This could lead to substantial savings for firms that didn't have to wait a few days to transact, and they could therefore take advantage of real-time changes and opportunities, for example, in the financial services sector. Through tokenized assets, there would also be a higher degree of automation because they use smart contracts that only come into force if specific conditions are met. This should, in theory, reduce centralization in the respect that your relationship with the asset is through a digital smart contract rather than with a single authority like a bank. So your ownership of that asset is immutable, or in other words, it can't be changed. Automation can also save companies money if they automate services in smart contracts that they currently work out manually or spend money on working out themselves. For example, calculating interest payments or coupon payments in the case of bonds. There should also be more transparency through tokenization via smart contracts and blockchain technology, with immutable transactions that I've just mentioned and a record being viewable on an explorer online, such as etherscan.io for Ethereum, for example. There should also be more opportunity and access to financial services for more people around the world. Through tokenization, as we saw earlier, if I couldn't afford a $500,000 house, but I could buy a small percentage of that through a token and still benefit from its price increase over time, that would enable more people to be able to take advantage of these financial instruments rather than just the wealthy. So it essentially provides global accessibility to assets for many more people around the world. And finally, we can look at the liquidity of assets, because a lot of assets can be quite illiquid, which means it's harder and takes longer to convert them into liquid cash, for example, that you can use, for example, like a house. But tokenization and blockchain technology can make traditionally illiquid assets more liquid, as they're now digital and operate 24/7. However, we should take a look at a few of the disadvantages of tokenization. And firstly, the regulatory uncertainty and the fact that tokenization of certain assets is very new could be challenging for businesses and investors to operate in that environment. Secondly, the security of blockchains and smart contracts need to stand the test of time and not be vulnerable to breaches like hacks. And finally, the adoption of tokenized assets using blockchain technology is still low when you compare it to other markets, and this will likely take some time to increase. But let's now take a look at some of the more recent examples of tokenization and some headlines. And firstly, HSBC has become the first bank to create a blockchain and distributed ledger-based real-world asset through gold that is available to Hong Kong retail investors. The tokenized gold asset is available via HSBC's online banking and mobile app in Hong Kong, and it's minted on its Orion Digital Assets platform. HSBC has also been working with Swiss-based crypto custody firm Metaco, which was acquired by Ripple, to offer a digital assets custody service for institutional clients. Secondly, diamonds have recently been tokenized by Oasis Pro on the Avalanche C-chain blockchain. This is backed by the Diamond Standard Fund, and the CEO of Diamond Standard, Cormac Kinney, stated that this makes the $1.2 trillion natural resource accessible to investors via a more convenient tradable fund, and it would be eligible for the US retirement accounts, IRAs, and available for institutional investors like pension funds and endowments, for example. Next, the market for tokenized US Treasuries is surging and is up 10x compared to back in January 2023, reaching now over $1 billion. After the recent launch of BlackRock's BUIDL, which I mentioned earlier when we looked at ONDO, which stands for BlackRock USD Institutional Digital Liquidity Fund, and which was launched on the Ethereum blockchain and is apparently the second largest tokenized government securities fund after Franklin Templeton's fund, as you can see here from June's analytics that shows the top four here, with Franklin Templeton's fund holding 32.2% of the market share, followed by BlackRock's market share of 24.9%. And you'll notice Ondo Finance as the protocol on the left-hand side for the fourth fund down. There are now 17 tokenized US government securities funds as of March 2024 on several blockchains that have reached over $1 billion of tokenized US Treasuries. And finally, tokenization is also being promoted in the UK through the government-backed Technology Working Group and parts of the FCA. And there are some interesting names in the list of members of this Technology Working Group, including the UK government through Treasury and the FCA, but also large corporations, including JP Morgan, BlackRock, Fidelity, etc. So don't be surprised to hear more news coming out about tokenized assets in the UK soon. But that ends this video looking at the large increase in assets tokenization and its potential moving forward, with countries, large corporations and financial institutions investing in them, and even central banks, which I'll be covering in one of my next few videos. And as always, I'd love to know what you think in the comments below. Do you see this as a positive step forward for assets, for blockchains, and for the cryptocurrency industry, or not? And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.